Welcome to the Enriched Wealth Podcast. Today we've got an exciting guest. We've got Travis joining us today, Director of Genesis Wealth, and we're here to talk about property. Welcome, Travis. Excited to have you on the show and excited to get into it. Welcome.
Thank you very much, Kris. Great to be here.
Thank you. And Travis, I want to start off to talk about who you are, because you are part of a group that are buyer's agents, and we were talking before the show. There's a lot of misconceptions out there on what a buyer's agent might be, or people might not even know what it is. So I thought let's start there, and then we can work backwards, hear a bit of your story about how you even got into being a buyer's agent, and then let's talk about clients and all the other things. So what is a buyer's agent?
Yeah, good question. I think it's one of those things that people don't have a lot of understanding around.
Yep.
Everyone knows what a real estate agent is.
Yep.
And as we were talking together before the show, there's a misconception that the real estate agent is there to help the buyer. And a lot of them say they do that, but at the end of the day, it's the seller who's paying the real estate agent, and their job essentially is to get the best result for the person selling the property.
Yes.
Where our job is actually in reverse. Our job is actually to get the best result for the buyer, not only in that transaction, but when we look at putting strategies together for clients, it's about working towards long-term goals and using property to do it.
Yeah, excellent. So it is a bit more of a holistic approach. It is for those people who are going, I want to build a portfolio of properties, or I want to get that investment property. Maybe I don't know where to start, or I've done a little bit of research on realestate.com, but I'm not really that confident in knowing what's the market doing, what is a good deal. And a lot of times, I even know you can look at property and it's different between suburbs, it's different between cities, states, all of those kind of things. So, are you solely focused on a geographical area, or is it more about understanding the client first and then sort of working backwards through that?
Yeah, so we're licensed in all states. So
Okay,
we're able to purchase properties in all states across Australia. They're all different, and you must be licensed. But yeah, you hit the nail right on the head, Kris. It's about knowing the client, knowing what their goals are, knowing their profile, their personality, and also their risk profile as well. So everyone's different.
Yes.
Yeah. So we just need to make sure we understand what the client's wanting, what they're comfortable with, what they're looking to achieve, and then we go and implement a plan to execute that over X amount of years.
Great. And you're part of that research process, aren't you? You're really out there finding the right properties that meet a client's what they're looking for, really, at the end of the day, isn't it? Saying if you want growth, that's what we'll go and look for. If you want rental returns, I'm assuming that's all part of the process. And
100%, and that's another myth too. A lot of people think that, and in some cases it's true, but a lot of people think that we need to compromise yield for growth or growth for yield.
Yep.
Where that's a myth. There are opportunities out there where we can get growth and yield, and that's the space we like to operate in with our clients.
Nice. And what I guess that comes, is it research? What are you out there doing to find those properties? Obviously not just putting your finger up to the window and hoping to find the right one, but is that part of your process at the end of the day, is really going out and researching the areas, the spots, the
100%,
stock.
yeah, and that changes over time too. So we've all probably heard what a property cycle.
Yep.
So each location has a property cycle.
Yes.
So there are times to buy, there are times to sell. Those sort of things. What's happening in the area with supply and demand and construction and infrastructure and all those sort of bits and pieces.
Growth
That's right. So we know that property investment tends to work on waves, so it's a matter of working out where is that wave cycle taking place. Is it early? Is it just about finished? Is it time to buy in this location, or is it time to buy in somewhere else where it's about to start?
A lot of factors involved, isn't there?
Yeah, there certainly is. And properties, it's one of those things where it's not cheap to enter into, and it's not cheap to get out of.
And it's a bit of a long-term commitment, isn't it? It's not just something you can go in today and get out tomorrow and things like that. And I think that's sometimes a misconception with all investments is, people look at shares and go, well, I can buy them today and sell them tomorrow. But if you came and talked to us, we'd be saying it's a 5 to 7 year journey with shares. You don't just get in today and hopefully you make a quick buck and you get out. It's about understanding those timeframes, how long is that investment cycle for you? How long do you want to hold this property, hold these shares and things like that? So I think all of that comes into play. That's really good. Hopefully for those listening, it gives a bit of a context on what buyers are, and we're going to dig much more into it as we go along. But Travis, I'd love to hear a bit about your journey on how you came into being a buyer's agent, bit of your background, bit of where you studied, those kind of things. So take us on the journey. How did it all start for you? Bendigo boy or
Bendigo born and bred.
Yep.
Third, fourth generation or whatever it is. So, grew up in Bendigo, started work at the Bendigo Bank back in the day when I was 19. So that was a few years ago now. And spent nearly 10 years there, did lots of things. So it was a lot different back in those days. You got to be exposed to a lot of different opportunities very, very early.
Yes.
So started lending. So I've got a very strong lending background, doing loans and so forth for people.
Obviously gives you a really strong lever into property and things like
100%.
that.
Yeah, 100%. I got to see very early. I think I was doing home loans for people when I was 21 or something like that.
Wow.
Yeah, it's very young. And I just got
looks a little bit different now.
Looks a lot different now, 100%. And I got to see just the numbers and how that works and the passive income that was possible back then. And so I guess I fell into that by accident. But I just saw an opportunity for me personally that I just couldn't say no to. So come 22, bought my first property. Didn't necessarily have a lot of savings in the bank at that point, but I knew how to work the system.
Yeah,
so
nice.
I worked the system and got myself a property pretty much without any savings.
Yep.
And a year later, a year and a half later, I think it was, bought my second one and so forth. And by the time I was 25 or so, I think I had about 4 or 5 properties.
Wow.
Yeah. And I didn't know what I was doing, but it just seemed to work.
Yeah.
So that was while I was in banking. Did my accounting degree while I was working at the bank at night.
Okay,
It took a long time.
Yep.
Realised I didn't want to be an accountant. That wasn't quite for me, but I like the numbers. When I was about 27, expecting a first child, I knew I was in love with property, but I knew banking wasn't quite for me.
Yep.
So I quit the job there and become a real estate agent.
Mm-hmm.
So listed and sold properties as a real estate agent for a number of years.
Yes.
That wasn't quite what I was looking for either, for various reasons. So I got back into banking and then eventually got into the building industry.
Okay.
So, worked for 3 different builders over 8-year period or something like that in management and sales.
Okay, I was going to say not on the tools. No.
Not on the tools, no. I've got banker's hands, mate. These are very precious hands.
I was going to say that'd be a big transition to be up on the roof.
That's right.
Yeah.
I picked up a pen the other day and I got a callus from it.
Oh, yeah.
So I look back now and it's really when I look back and look at the banking, banking, the actual real estate experience and the construction experience and that as well, and personal investing, it sort of fell into that buyer's space. I'm passionate. I've always been passionate about helping people create passive income and have a lifestyle that suits them. And
I think I was having a look, doing a little bit of research before we caught up today, and I love that vision. Do you want to mention that vision while we're on it as well?
The mission statement of the company.
Yeah,
for sure. Yeah, for sure. So, mission statement of the company is to help 100 families replace their full-time income by 2035 through property investing, so they can have the time and the resources to do what's important to them with their life. We only live once.
Yes.
We spend a lot. If we don't do it right, we spend a lot of time working for the man or doing this and doing that, and.
Yeah.
And we just want to try to help people have more choices.
Helping change 100 lives.
Yeah. That's right.
That's great. That's really good. And hearing your journey about that experience, it just seems like everything was pointing towards this point. Like you've been on the banking end of the scale. You've gone and bought and sold properties. You understand how the construction side works. So really, the next step is saying, well, how do we now help buyers get into this property market with all that experience you come with, and doing it yourself as well too. I think sometimes people can be giving this advice without actually experience or without actually working it themselves, where you've actually sort of gone through that process yourself, on top of doing all these other areas. So I think that's great.
Yeah, it's an interesting one you brought up, because I do see that quite a lot. You know, you look on social media and all these sort of things, and everyone's a property expert, but you go, how many properties have you purchased, or what have you actually done? And you know, they might be school teachers or something like that and sick of it, and then next year they're property experts. So by accident, I won't take the credit to say I've engineered this, but just by accident, it's been quite complimentary. So it's very useful.
Yeah, and I think that obviously gives you great experience when you're going into that research mode to be able to go, I know what I'm looking for. I understand what's going on with how long builds take. I understand how long this is going to need to come online, and those kind of things as well, which that forward looking would be invaluable to strategy and things like that, I'd imagine.
100%, and also in the negotiation process, because you know, there's not just theory there. I've actually lived the experience. I've been the real estate agent on the other end. I know the psychology behind it.
I know what pressure on both sides.
I know what they're saying. I know what they're not saying. All these sort of things, and I say to the clients, look, we're not perfect. We don't get it right all the time, but you know, we've done it a long time. We've done it hundreds and hundreds of times, and we would like to think that we read the play a lot better than you know, we get it right way more times than we get it wrong.
Yes, yep, and I think too, bringing that additional knowledge. Like, I know if I went out to buy an investment property tomorrow and I wasn't aware of what I didn't know, I think I'd be going in and not knowing where the red flags are or where the issues are, or is this a good price for where it is? And if I'm just doing my own research, I think there'd be pieces I'd miss in that puzzle. I'm guessing from that, where you're sort of coming and looking at that going, well, I know what the market's doing at the moment. I know where it's going. I know the stock levels. I know the demand. I know that's actually overpriced, or actually we can get a better deal there, or do that as well too. So having that knowledge, I think, is invaluable too, because it can dramatically change yields, I'm assuming, as well. If you're coming in at the wrong end, it can mean that it takes longer to see return on investment, or it's a lower return on investment through that period as well too, which can impact everything else you do as well, I imagine.
Yeah, 100%. You know, I always say to clients, when we're looking at putting a property into the portfolio, we don't necessarily look at that property. We want to know, how does that property help us get the next property faster?
Yes.
And if it's not going to complement or add value or make it easier for the next one, well, maybe that's not the right property we should be adding for your portfolio. We're either adding an anchor, right, or we're putting wind in the sails for the next one. And it's really important to look at that. The other thing...
And I don't think people always think about the next one or the longer-term impacts. It's sort of, this is a good deal, or someone's made a good offer, or it seems like the right thing, let's jump in.
Yeah, happens all the time.
Can be a very expensive venture if it's not done correctly.
Very expensive, you know, and you're just going to need to think about that lending. How does this affect my lending capacity and all these sort of things? And so it's really important. And you touched on before about the different locations and so forth, you know, making mistakes. Like, you know, some markets, you know, some are hot right now and some are cold right now.
Yes.
You know, and there's always a hot market somewhere in Australia, and that's what I love about being a buyer's agent. You know, people catch up at barbecues and go, how's the property market? And everyone's looking around locally going, it's not all that great, is it? But they just don't know what's happening beyond. Like, it's out of control.
Yes.
You know, we're buying properties in locations like interstate, and have done for the last few years, that are much more fierce than we experienced here in Bendigo during COVID.
Okay.
Right.
Wow.
And people just can't understand that, but it's happening right now.
Yep.
And
I guess unless you're got your finger on the pulse, you're just not aware of that.
You're just not aware of it.
And the media probably does no help, because all they say is there's a rental crisis or there's a housing crisis, but where is that housing crisis currently happening? Because it's not well, it's just go and buy whatever, because everything's is needed at the moment, or there's low stock everywhere. It's actually going, where are the areas that make sense? So,
that's right. And where it makes sense today, it may not make sense in 3 years' time.
Yep.
It always changes. Yeah.
I'd love to hear, we're talking about markets at the moment. What are some of the trends you're seeing? And maybe it doesn't necessarily have to be state by state, but we're just getting a deluge of information from the media at the moment on property or on cost of living. So what are some of your insights at the moment around, is there a perfect time to buy, or is it actually there's a perfect time to buy in different areas. I'm probably answering my own question here, but I'd love to hear a bit from you on what you're seeing out there at the moment around some of that, around that conversation around property and the conversation you're having with clients versus what we're hearing from the media.
Yeah, sure. Look, you've got to look back in history, and Australian property has performed extremely well over history.
Yep.
Right, doesn't necessarily mean it will continue to do that. Of course, there's the disclaimer for everyone. However, we are going through an unprecedented time with immigration and things like that. So, when you look at simple economics and so forth, and the supply-demand issue and the low vacancies and all this sort of stuff, which is unprecedented, right? We are going through a cycle which I think is new, and it may not be repeated. So I think right now, generally speaking, property is a fantastic option for anyone who can afford that.
Yes.
What does it mean that I can afford it? I always say to people, look, if you're going to do something that you're going to stress out and is going to keep you up at night while you do it, don't do it. It's not worth it, right? So it's a matter of trying to work out what you can afford and what you can't afford.
Yes.
But there are some fantastic options, and there is, again, people only look around what they can see, and they see, maybe local prices, that they might be out of that market, but there are plenty of other markets around that are very affordable and deliver great growth options, great returns, and so forth. That actually, that we help clients get into all the time that just didn't know exist.
Yep. You touched on the supply and the demand. Are you seeing many new builds? I mean, I'm hearing that we're well behind targets on where we want to be for new homes and things like that. Are you seeing anything contrary to that, or is it literally we're just not building enough houses at the moment? Yeah,
good question. So in Victoria,
it
has been quite slow in the building sector for a number of years.
Yep.
We saw that on the wall 3 or 4 years ago. Interstate, so there's been lots of activity over in Perth, for example, southeast Queensland, Adelaide.
Yep.
There's been huge construction numbers in those places over the last few years. So it really depends on where we're looking at as to what the answer to that question is.
Again, comes back to understanding those other regions and those other markets, doesn't it?
Yeah, it certainly does, There's always something happening. It's just a matter of where it's happening.
Yes. Yep. Yeah. Excellent. And that's a great take-home message, is that it's knowing where to look and not necessarily here is indicative of all of Australia. That's great. You touched on the finance piece, and we talked a little bit about anchor, whether it's an anchor or a sale. What are you seeing in terms of the banks and their capacity for lending at the moment? Because that's sort of, we came out of COVID and interest rates weren't going up for 4 years, and then all of a sudden interest rates went up more in those 4 years than they've ever gone before. It's probably impacting people's ability to borrow and things like that. So are you seeing that there's still appetite out there, that you're still able to get deals across the line that you need to, and things like that when you're dealing with the banks and walking through this journey with the clients?
Yeah, 100%. 100%. There's different lending policies for different types of assets and things like that. But generally we haven't had a problem with banks or anything like that at this moment in time. We do and have worked in the NDIS space as well, which is a different segment in the market altogether. We have seen some big reforms late last year in the financing of those properties, which has severely affected some investors. So it's a very interesting story. But apart from that, it's all systems go.
Been quite good. Okay, excellent. That's really good to hear. If we've talked a bit about property and those kind of things, I'd love if you've got a couple of examples of some that you've been able to help clients with going on that journey or getting towards that financial freedom, because I think the stories is what people go, I can resonate with that, I understand that. So I'd love to know a couple of stories that you've been able to help clients and take them on that journey.
Yeah, for sure. So first one comes to mind is actually a local couple, local business owners who, they live in their own home and they desperately wanted to get into the investment property market, and because they understand the benefits of investing in property, which one of the main benefits is leverage. Leverage your deposit. To maximise your returns. However, they couldn't quite necessarily do that because of personal circumstances, finances, and so forth. However, after a strategy session we undertook, complimentary, which identified some possibilities in the superannuation fund,
Yes.
Which we're currently, sitting in managed funds, just walk through some possibilities that, by setting up a self-managed super fund, we're able to help them get into a very, very high cash flow property which service itself. So it didn't actually put any cash flow pressure on them whatsoever, and to be able to get into that property market through their super. So that was really pleasing, and they're very grateful for that.
And I think that's probably one thing people don't always realise is you can borrow in super. You've got that there as another lever to pull. It's another capital resource that you can deploy into property as well. And I think understanding that whole picture of, well, where is everything and how can I use these different levers in what we're doing. So I think, that's a great outcome. So
it was really, really pleasing. Another one, a divorcee was referred to us, it was probably 1.5 years ago now. So he had 13 years to go until he was retired, and he had a large sum of money, lives in Melbourne, and again, he saw property as a way forward for him. So, same thing, we helped him set up a self-managed super fund, but we also helped him get into a high cash flow property over in Adelaide, which has already grown over 100 grand in equity since we did that last year.
Wow.
And delivering very high returns for him. So, so again, it's just a matter of just trying to find those markets that are growing, that can add some cash flow into the picture, just to help the clients keep adding to their portfolio over the years. And then at the end, it might be 5 or 10 years down the track, it might be time to sell and consolidate and look at what's next.
Yes, and I think that's one of the things I know over the years I've seen with clients in different areas is that there is a time to buy and there is a time to sell, and sometimes people aren't always understanding that you don't hold everything forever.
No,
and sometimes people can get a little bit connected to, it's done really well, why would I sell it?
Yeah.
If we go back to those cycles, well, it's not always, you're not always in that growth cycle. You're not always in that period of, and circumstances for people as well too changes. So it's not necessarily saying that made sense then, but it doesn't make sense now. So how do you go having those conversations when maybe it's time to sell, or it's time to actually consolidate stock, or say if we're going to be able to do this next thing, we need to be able to free up that opportunity?
Yeah. So so as a complimentary service with our clients, we offer a annual review.
Excellent.
For their portfolio. So the clients might live anywhere in Australia. So we do this. A lot of our business is done online through video and so forth. So but we sit down with the client, complimentary, look at the how things are performing, their portfolio. Like you mentioned, things might change in clients' lives. So they might be expecting a new child, or someone might have lost a job, or even their goals might have changed as well.
Yes.
So it's just an opportunity to revisit, have a look at what's going on. Is there opportunities?
Is what we did working?
Is it working? Is it not?
Does
it this? Is it that?
Yeah.
Do we need to sell this? And what's happening in this market that we're holding this property in? All these bits and pieces. So it's a really good opportunity to catch up, value add, and see what's next.
That's great, and I think that's one of the crucial things. Is it's not a set and forget, is it?
No,
like
it's
some
not.
people go, although it's a long-term investment, doesn't mean it's a long-term. Like, you don't have to look at it for 10 years. You've
got to keep looking at it.
Exactly, and you've got to keep understanding what's next and how it works and what's happening in that market now. I think is a big part of that.
Yeah, that's right. And you don't know what you don't know. So it's just we just catch up, have a conversation, might go for an hour, go through the numbers and bring some ideas, and at the end of the day it's up to the client what they want to do or what they don't want to do.
Yeah, great.
Yeah, I always explain property to clients. People laugh sometimes, but you mentioned about there are times to sell, and I always say property is like an orange, right? So the idea is you want to buy an orange that's full of juice, right? And then you get the best out of it, and you squeeze it down into nothing, and then basically when there's no juice left, you've got this. You've got a choice to make. Do I throw that orange away, or do I sit there and wait for it to regenerate?
Yes.
For however long until I get the goodness out of that again. So so basically the whole idea is really trying to find that property with the most juice in it.
Yep.
Right? Ride the wave, get the best as you can out of it, try to identify when it's not necessarily going to give you the returns that you need. And then we need to make a decision. Are we going to sit and wait for years until it's going to start producing again, or do we get rid of it and replace it with a brand new fresh orange?
And I think that's, if we talk about those cycles and those waves, it's either waiting for that next wave, isn't it? Or it's actually saying, well, you know what? Over here's actually a great surf beach. Let's jump on that wave instead. rather than waiting for this to come back to what it needs to be.
Yeah, that's right.
Commercial? Do you guys do commercial as well, don't you?
Do commercial.
So-
I don't personally do that.
Yep.
Yeah, I have a partner that specialises in that.
Excellent. But I'd love for the listeners just to understand some of the differences between residential and commercial, because I talk to some people and they understand residential because
Yep.
they live in a house.
Yep.
So that's an easy concept.
Yep.
Commercial's a whole different beast, though,
It
isn't
is.
it?
Yeah, it certainly is. For lending,
Yep.
how the asset gets valued, all those sort of bits and pieces. Who's paying the outgoings. It is totally different. It's
much more tenants dependent as
Yes,
well too, isn't it?
it
Where
is.
residential, if it's a 3-bedroom, you're going to find someone who needs a 3-bedroom house. Where to find a tenant that fits that commercial property can be a little bit harder, can't it?
That's right. And we always say, look, generally speaking, we always say that commercial investing is quite a specialised beast, and
Yes.
it's not for everyone. And it is more for that seasoned investor with a lot of assets behind them and a lot of cash flow behind them. And we all saw this, particularly in COVID times and things like that, where it's all good and well when the commercial property has a tenant in place as a landlord. Things are great, outgoings getting paid, rent's getting paid, everything's fantastic. But if that tenant leaves, you might be you might have a vacant property for a year, 6 months, a year, or something like that, and you need the ability to be able to hold that asset for the next tenant.
The turnover is not as quick as it and there's usually fit outs and things like that that need to happen as well too.
That's
where
right.
Residential, everyone understands. Someone moves their stuff out, someone moves their
pretty
stuff
simple.
and away they go.
That's right.
If we're talking about tenants, how crucial are tenants to property investing?
Tenants are very crucial, very, very crucial. So you want to make sure, part of the strategy and things like that in the research, you want to make sure that, you understand the property and the area and those sort of things that you're looking to invest in.
Yep.
Insurance is a really important thing as well. So that as we go through the process with our clients, we make sure that they're getting introduced to all the experts in all the different fields to be able to get adequate covers and things like that that people don't think of. So landlord's cover is very important. People don't necessarily think about that, or they know.
So what does landlord's cover do, just for those who might be thinking for their first property, or they've got a property and they're going, gee, I had never even thought about that.
Yeah. So landlord's insurance is a special type of insurance that you take out when you own an investment property.
Yep.
And it doesn't only just cover you for, if the building burns down or something like that, but you can also take additional covers for tenant damage, loss of rent, rent default. Tenant just gets up and leaves. All those sort of bits and pieces. With VCAT or third-party authorities and things like that, when there's a disagreement, you as a landlord might be not getting that income for a period of time, but the bank's still asking you to pay that monthly payment. So,
and if we go back to that seasoned investor, they might be able to ride some of those storms a little better. But if it's your first one, or you've got into it and now you've got a family or something else has happened, you really need to make sure you've got that coverage at the end of the day, don't you?
Yeah, 100%, and also not having to worry about it. It's really, really important. So just making sure that, you've got that adequate cover in place just in case that 1% does happen to you.
Yes. Yep. And you can think it's not going to happen.
Yeah.
But there's always plenty of stories out there of that.
Yes, that's right.
Talking about the tenant quality and things like that, do you find that that's something people don't always think about? Is that risk of who am I actually getting to rent this property as part of that process? And I know there's usually a bit of choice when you use a real estate agent and you're lending it out, but is that something that people don't always consider as part of that process of, well, who would actually be living in the house? Who am I actually getting to pay the rent on this investment property?
Yeah, I'd probably say most clients don't think about it. Some do, but I would say most don't. And that's another thing about making sure too that we're understanding the area very well, but also understanding vacancy rates and things like that, because a healthy vacancy rate typically between landlord and tenant is about 3%, 3.5%.
Okay. Yep.
At the moment, most places are well under that, but when they're operating in that 1% mark, things like that, you'll find that being a landlord, you've got a much more stronger choice as to who you can let in the property. You're not, because you're holding options. The cards.
Yes.
Whereas if you're going into a location that might have a 6 or 7% vacancy rate, tip, don't do that. But if you do find yourself in a location like that, well, the tenant, you're a bit more desperate, and you sort of tend to say yes to whatever comes through, and that's a dangerous place to be in.
Problems in, can't you?
Correct.
Yeah, which
That's
again, understanding the area, understanding the risk profile, the tenants and things like that is crucial. No, that's really good. I want to touch on Victoria, because Victoria's brought in some much more stringent rental standards over the last 12 to 18 months, which has sort of probably impacted markets, impacted yields and things like that. Are we seeing that across Australia, or are you finding that different states, different rules mean there's different opportunities and things like that as well too?
Mm-hmm. Yeah, it's definitely different in different states.
Yep.
100%. So in my opinion, Victoria is the most legislated state in regards to making sure, standards are at a certain level and things like that, which at the end of the day, the consumer pays at the end. So,
correct.
So really, it's the tenant paying at the end of the day, because the landlord themselves, they need a certain amount of return.
Yes.
Right, to repay the loan and get so at the end of the day, it's the tenant that's paying.
And it's not about saying we're looking for dodgy properties, but it's just about saying there is red tape attached to every new rule, every new bit of legislation. There is more checks and balances that you need to pay for, which then get passed on to the consumer at the end of the day, where sometimes a bit of common sense can go a long way.
It can go a long way, exactly right. And that's about when we get to that point in the journey with the client about presenting properties.
Yep.
This is right at the end of the process, to making sure that before they make a decision on which property that we're going to move forward on or hope to move forward on, is that one might attract certain issues that we need to be aware of, which doesn't necessarily mean it's bad. It's just good to know what's ahead of you, where another one might not. So that might come into play about, okay, which one's a better one for us.
Yep, and which one's going to give us less headaches at the end of the day. And
that's right.
Keep us up less at night. And,
correct.
And all those kind of things. No, that's really good. If we talk, you talked about that seasoned investor and maybe someone who's got a portfolio already. What are some of the things that you're helping those clients who have established or on their way to replacing their income? What is there different things that you're applying to those circumstances as opposed to that person who's getting that first property and sort of taking that first step into the journey? Does it look different as that momentum builds and you've got that you've got that portfolio of properties?
It does look different. Probably with the ones that are more seasoned, one thing that does come into play is land tax. Mm-hmm. So I was just speaking to a new client yesterday actually, and we were having this exact conversation with them, right? So they were buying their first investment property. So they're open to all the states of Australia, which is fantastic. And I was just explaining to them that that just helps us be able to not be restricted into finding great opportunities. However, if you were coming to me with 5 or 6 different properties and say Western Australia was the only state you hadn't invested in, we might be having another conversation around, okay, well maybe we might not look in all these other states. We might just look at Western Australia, for example, just because of, we want to, number one, we want to diversify and make sure that all our investments are diversified for various reasons, but also too on a land tax point of view, because that's all state legislated, so we want to make sure.
So very, very much state specific.
State specific, that's right. So, if you have all your properties in Victoria, for example, you're going to, you might have 10 properties in Victoria, you might be paying $30,000 a year in land tax, for example, just as a figure. But if you had it spread out, you might be paying zero. So it just depends.
Which obviously then impacts yields and things like that as well too, which is where that strategy comes into play, where it's thinking that longer term, how do we get into where we need to go? In terms of building a portfolio, we talked a little bit about anchors and wins in the sale. What are some of the things that impact people being able to acquire? Because I've heard sometimes it can be easy to start, but it's not easy to continue to build. So what are some of those things that people put in place that hampers their ability to be able to build portfolios rather than just get that single investment property?
Yeah, I've been in property for a long time now, and I've seen it time and time again. And this is what I love helping people understand at that early stage. So we spend a lot of time in building the foundation with a client, right? Could be months before we're actually ready to start buying a property. It's that building the foundation. If we don't build it right, people probably fall into that trap, and I call it a bottleneck when it comes to lending. You might buy one or maybe two, and then the banks will just say no to you because you're done. So it's about just understanding what your lending capacity is. Also in the strategy, we also help the client understand, okay, what's your life going to look like in the next 5 years? Are you going to be on one income in 2 years' time, or you're currently on one income and you're going to be on one income in 2 years' time, so that'll expand? So it's all trying to understand where you are now, where you're going to be in a year or two, and where you're going to be in 5 years, to help sort of map out what property might be good now that will help us buy another one in 2 years' time. And so it's very personal and depends on the client's circumstances.
Yeah, but if people aren't conscious of that or making sure that they are going through the process, they could be hampering future ability to purchase, future ability to build, and potentially go from trying to replace their income to not at all.
Not at all. And essentially what they do is they actually create a noose around their neck, tying them to their job even longer, right? Because they just have to get pay increases and things like that to keep up with the expenses of this property that they probably shouldn't have bought in the first place.
Yep. Which probably leads me on to, what are some of the mistakes you've seen property investors make? And it's not here to say people do the wrong thing, but it's definitely about saying, well, how can people either avoid, or if they've got those red flags, come and see you or someone to actually go, I've done the wrong thing. I need to sort this out. So what are some of those issues that you've seen come up for people?
Yeah, we have touched on a few of them. Not diversifying. That's one. Rushing into buying a property is probably the biggest one, without really.
But won't they miss out on the opportunity?
There's always another one around the corner, and it's probably better.
Yep.
So just really not rushing into it, thinking I have to keep up with the Joneses.
Yes.
Right. I like to really slow things down with the client and make sure that they fully understand what they're doing and why they're doing it. Not what they're doing, but why are they doing it?
Because 10 to 20 years is a long time.
It is.
Yep.
Exactly right. So just not rushing into things. People tend to rush into things a lot. Also making sure that they're getting the right lending facilities as well. Not only rates and things like that, but how the lending is structured. Right.
Which I think is a crucial bit to that longer term growth, isn't it? Because sometimes people just focus on that rate. If I can get the best rate, that's what I need. Where that can actually impact that longer term, can't it?
Yeah, that's right. And just making sure it's structured right, just to get the most tax advantages out of the structure and things like that. That's why it's really important to have a group of professionals around who specialise in the different factors to be able to make sure that you're getting holistic advice before just rushing in and buying something and
hoping that it works.
Hoping that it works.
Yep.
Most often it doesn't.
Yes.
When you do that. So that's probably what I see most.
Yep. You've talked about where the next 5 years. So if we go 5 years from now, we're in 2030. Where do you see markets? Where do you see Australia's property market? Are we back to normal stock levels where they need to be? All the houses built that need to be built. I'm struggling to see how we can turn this around quickly. It is my concern.
Yeah.
But I'd love to hear your insights. You've got a lot more feet on the ground with some of this. So.
Yeah, look, I have to agree with you, Kris. I can't see how the supply is going to meet up with the demand. It will come a time where that does align again.
Yes.
When that is, that's anyone's guess. But if that happens in the next 5 years, I'll be extremely surprised.
Yep.
Extremely surprised. As far as where and the trends and things like that, just a little bit of a inside tip for some listeners. We are starting to see a little bit of a trend to come back to Victoria over the last probably 3 to 6 months. So that's interesting. The numbers are starting to make a little bit more sense for investors in Victoria.
Is that some increased demand, or what's sort of driving a bit of that shift, do you think?
Yeah, well, we've seen enormous growth in a lot of the other states.
Okay.
Enormous growth, and we've seen the rental yields come down. So as an investor, typically you're looking for growth opportunities and you're looking for returns,
Where's
the cash
the
coming
yield?
in, the
Yes.
yields, right?
Yep.
And over the last couple of years, 2 or 3 years, other states typically, for various reasons, they've just exploded.
Yes.
So as an investor now, it's sort of starting to come back, and Victoria is starting to make a little bit more sense, and we've started to see the numbers and the interest and the demand start to pick up down here. And even when I actually talk to a lot of the real estate agents on the ground in various parts of Victoria and things like that. All of them in the places that we're buying are confirming that their phone is starting to run off the hook with buyers agents and things like that, looking to buy properties in those locations for clients.
So there is a bit of, again, we talk about those waves, they're shifting again.
That's right.
Yep.
That's right.
Where what made sense 2 years ago might not make sense now, and that can sometimes be the hard thing about the barbecue conversation is, well, I got this property, it's doing gangbusters, where that might be a signal that it's coming near the end of the peak, or it's you sort of you're in the midst of it. Where's that next cycle going to kick up from as well too?
That's right.
That's actually quite interesting.
Yeah.
So, yeah, that's good. In terms of misconceptions that people might have around property, like we're talking about where we're going over the next 10 years, and people go, well, property, everyone's priced out of the property market. But like looking at your website, there's still properties that seem to be reasonably priced in some of your case studies.
Yeah,
so
100%.
What are some of those misconceptions people have? Do you need to be looking at properties worth $600,000-$800,000, or are there other options out there as well too for people?
Yeah, there are some great options out there. There are some seriously magnificent options out there that people just don't know about, you know. So, we're still buying, everyone's different. We're still buying some properties for clients that are delivering great growth and great rental returns for less than $400,000. And we're not talking apartments or units. We don't necessarily do those.
Yep. Why don't you do them?
Historically, the growth hasn't been quite there with when you compare it to houses, because at the end of the day, it's the land that increases in value and the house decreases in value.
Yep.
The land appreciates, the house depreciates. So we like to buy land where we can. That's how we like to steer our clients.
Yep. Because I think that can be a misconception sometimes, isn't it? A house is a house, where an apartment is not necessarily the same. You've got strata costs as well too.
That's right.
That people don't always think about. There's
They don't
the body
think about
corporate
it.
and things like that that can add up quite quickly.
That's right.
And really impact those returns as well too.
Yeah. So there's a big difference between gross yield and net yield. In that apartment space and unit space, the gross yield looks attractive, but when you take away all those costs and stratas and all those sort of things, it still might be slightly better than a house typically, but not much. And but the growth is certainly, we've seen it's certainly not there. So.
And I think it's getting that distinction for people as well too. What's the net yield?
That's right.
What do I actually get to pay off my loan, or what do I get to actually come into the bank account that helps support what I'm doing? Because that's a big difference, isn't it, sometimes?
100%. You've got to get the full picture, the full holding costs, and account for everything and see what's there at the end, because at the end of the day, that's the most important
part.
And
the glossy ads won't always touch on that, will they?
They won't. Typically not. No, exactly right.
No, that's really good. In terms of for you and what you're doing with clients, what are some of the things that you're seeing are some of the trends that have been changing in terms of conversations with property? Because I know sometimes people are all in on property, or people are maybe I'll back off a bit, or we've had really good growth, maybe we just need to set and forget. Is there still a real appetite for continued purchase and things like that at the moment, or coming off that COVID wave that we saw, where prices sort of across the country just seem to go up 20%? Are people sort of going, oh well, I've seen the growth now, I'll just enjoy what I've got? Or is there still appetite? Is there still an understanding that there are still places that are booming in different areas?
I would say the appetite is stronger than I've ever seen it.
Wow.
Yeah, without a doubt. There is a hunger, a real hunger out there for people to buy properties.
Is there a bit of FOMO with that too? Is there a fear of missing out?
I believe there probably is. Yeah. Yep. 100%. But that's certainly there. But there's a genuine understanding and a logical understanding of why it's super important to invest in property. Yes. Probably more so now than ever, with those reasons we touched on right at the start.
Supply and demand.
That's right.
Is really driving some of it, and I'm not saying that we're doing anything to change the demand at the moment. There's still a lot of people looking for property, isn't there?
Yeah, that's right.
Out there, it's not changing.
Yeah. So within Victoria, for example, what's slowed a lot of that construction industry down, which I used to work in, of course, is the cost of to build these days. You know, and there is a genuine gap at the moment between cost of building and buying an established home.
Yes.
You know, so what we're starting to see is that until that gap between the established market and the brand new build diminishes to become a little bit more realistic, it just makes a lot more sense most of the time to go and buy an established property.
Yep.
And we'll only start to see more people build when economically it makes sense to do so.
Yes, because there was probably a period there where it actually made more sense just to build than it was to buy.
That's right.
Yeah,
that's right.
And we'll sort of flip the switch at the moment, and it will come back again at some point.
That's right.
So do you guys look at new builds as well, or is it
100%.
just
Yeah?
So it's not just established homes, then it's actually saying, well, you know, land and house package or subdivision and things like that as well too.
Yeah, pretty much everything. So, and that's one of the benefits, or one of the things that we probably like to say that we offer that I haven't quite seen anywhere else. Typically, you might have the call and buyers agents. You might have the agent that might just specialise in new builds, or only specialise in established homes in Victoria or whatever it is, right? Or commercial, or you know, where we cater for any type, anywhere, because we like to be able. This is a relationship business for us, if that makes sense. So it's not necessarily about a transaction. We like to be able to walk with a client over the years to help them achieve something special, and we want them to know that whatever their property needs are, we're here to help.
Yep, and that means you're not locked into just a specific solution each time.
That's right.
For clients, it's really saying what in the strategy of where you're going, what makes the most sense, and how do we build around that strategy. That's
right. Yeah.
Yep. For someone who's interested in coming to see you and get some more information, what do they need to do? What are the first steps? Is there anything they need to prepare beforehand? Do they do a bit of research, or do they just say, I'm interested in property, I need to come and see Travis and the team? What's sort of the process for people to come and see you and go through that?
Yeah, it's pretty simple. You know, we're here to help. It's not all that scary. I know picking up the phone could be sometimes, but it's just simply just jumping on the website, genesiswealth.com.au.
Yep. We'll include all that in the show notes as well, so people can go there and click the link. So,
or picking up the phone and just having a chat. We like to just have a bit of a chat just to work out, you know, basically what you've got in mind, what you think you want. What we find is a lot of people want something, but they're just not necessarily sure, number one, whether they have the capacity to do it, or you know, whether they can do it as well. So we're just here to basically just have a quick informal discussion with them, just about, you know, what may or may not be possible, whether we're a right fit or not, and if we are, you know, if we do see some sort of capacity there, then it's just a matter of, you know, booking in a complimentary strategy session. So we do that complimentary.
Excellent.
You know, to be able to just take a deep dive and work out what you know, different options and what may or may not be possible.
And I think that's one of the valuable things is having a conversation with the experts. And sometimes talking to the friends and things like that, you can get all little bits of information, but actually sitting down with someone who's got the finger on the pulse, who understands, I think that's where the value is. So that's great. Have you got any last take-home messages, little tips for anyone listening going, this is all sounding new, or I'm actually getting a bit excited? What do I want to do? Is there any little things for people that you've got as a bit of a last thing before we finish up?
Yeah, look, just I think if there's doubts or there's fear or anything like that, just pick up the phone, ask the questions. A lot of us tend to live in a state of misbelief. Or not being confident about things. So the tip is just to ask. You never know unless you ask. The other thing too is, you know, just keep your eye on the interest rates and things like that. If you do go and buy property, probably the biggest tip I'd have for people is don't borrow or don't max yourself out to what the bank says you can have. Right. Really be conservative. You don't know what, you know, there are talks about what the rates are coming down, but you just don't know. You don't know at the end of the day, and
do the numbers.
Do the numbers. That's right. You know, so just be conservative, and whatever you choose to do, just make sure that, you know, there's a big there's a big buffer in place there, just in case things don't quite go as you anticipated.
Excellent. All right. Very good. Thank you, Travis, so much. I've really appreciated the conversation today. I've loved digging into property a bit more and understanding it. And hopefully for all our listeners, you can understand a bit more about buyer's agent and how they can help you on that journey for property acquisition and growth, and hopefully enrich your lives. So thank you, everyone. And thank you, Travis. Really appreciate the time.
Thanks for having me, Kris.
No worries. Thank you.